Mayuresh, Joshi, this week the big story is Infosys numbers which come on Friday, and ahead of those numbers a long-term stakeholder has decided to press the exit button.
Morning, Nikunj. So if you look at historical trends on how Infosys has behaved before numbers, the expectations were very high for the past 2 quarters. It has delivered in the last 2 quarters. Whether it will deliver going forward, and the management is highly hopeful and intentful that it will grow its dollar revenues by 14%. However, we are a little bit less sanguine about the whole growth story in dollar terms, and our own expectations is a muted 12.5% growth in dollar terms. What this really effectively means for Infosys is the target of $20 billion in terms of top line that the management has set out. They're probably on the right way of doing it. Client mining is happening, new client wins are coming through, the TCVs are happening at good margins. What happens with Q4 in terms of discretionary spending will be a big talking point in terms of management commentaries for the fiscal year ahead. So clearly our own take is that in cross-currency terms, the growth should be pretty decent, not just for Infosys, but for top IT companies in general. On a quarter-on-quarter basis, you've probably seen a 2.4% rupee depreciation happening. So if you adjust for the cross-currency hit, GDP, GBP, if you look at how the yen has behaved, you might have some amount of shave off happen in terms of EBIT margins. But largely our expectations are that there are more tailwinds rather than headwinds at this point of time, utilization levels going up, attrition levels stabilizing, and valuations being very, very reasonable compared to the last 5 years average. So remain optimistic on large cap IT stocks at this point of time.
Optimistic on IT is the word coming in from Mayuresh. But CK, what about the chart pattern on the IT space? Because that's getting a little wobbly. In particular, how do you think Infi should be traded this entire week ahead of its numbers on Friday, which is trading off?
Well, first up, I don't think the market will wear this news about Aberdeen getting out of the stock. And I think... in particular, this, the timing of the sale seems to be a little off. Friday is the results and they sell a big chunk, and Aberdeen is, like Nikunj mentioned, one of the longest term investments in Indian markets. The charts are not looking very healthy. I think the sale has been in progress for about 2-3 sessions. So we see consistent, bearish candles coming down into near-term support as it were, but then with this kind of news, I don't believe the near-term supports which are seen at about 1170 odd levels, I don't think they will really hold. So my expectation is that it might continue to remain a little wobbly till Friday when we have results. But any weakness in the numbers is going to see Infi getting pressed down. As far as the other IT stocks are concerned, they are a bit of a, let's say, wobbly wicket as well. TCS, I think only Wipro is managing to show little bit of maybe steadiness there. Mindtree is something which is on the downside, and any rally in Mindtree continues to remain a sell. So, and HCL Tech is in too much of a range for us to really take any readout on that. So as a whole, I think IT as a space seems to hold out more interest in the mid-cap, small-cap space. The large cap seems to be ranged or with a slight downward bias. And Infi coming in with this kind of news, I think with some result.
Okay, fair point. Actually, we are well over 845, and let's also take some trading ideas from our technical experts. And Mitesh, your 845 ideas, Kane, buy on Kane. Let's understand the logic behind this one.
See, one is the sentimental news about crude bounce back. The other thing is that technically the stock has rallied a lot from levels of sub 130 to about 156, 158, and then last week we saw an intra-week low of around 141. That kind of completed the pullback to the short-term averages, and then on the intraday charts we got some reversal towards the end. So I think it's possibly getting into an uptrend again. Should at least retest the recent highs of 156 to about 158. And I would now suggest a buy with a stop below 145. And I also have a buy on HTIL where we have seen some crossovers which are positively biased on the indicators. So that's a buy with a stop at 73 for short-term target of around 80.
Right. CK, what would be your positional play?
Well, I'm looking at Siemens as a positional play, and it's a mix of the chart patterns and the derivative setup in this particular stock, which seems to make it interesting. As far as the charts were concerned, the stock had a very strong resistance around 1070. It was making a big range there, and that range has seen an upside breakout. So that's a clear positive, and the market is actually building on that breakout. And this breakout is patent till the end of last week, so one expects a momentum to continue. Second thing in its favor is that there has been a consistent closure of short position, which was visible in the March series and is also visible early in the April series. And moreover, we are seeing some out of the money higher strike call contracts being bought, and that is interesting, suggestive of further up moves to come. So maybe the move will be a little slow since it's not a very trader patronized stock, but then I think it will be consistent. So long position in Siemens are advocated at the current price of about 1135 till 1125, keeping a stop below 1120, targeting about 1170 at the minimum or even greater.
All right, CK, thank you for that. Well, one stock where everyone thought a year ago nothing could go wrong was Maruti, and now blame it on the weakness, the strength or the currency market effect or the yen equation. Maruti is just falling as if there is no tomorrow. Sub 3500 for Maruti now. Sandeep, is it time to be a contra buyer here? Because let's be realistic. I mean, Maruti, you value Maruti for its business. You don't value Maruti or rate Maruti just because the currency equation right now is not favorable.
Yeah, so I think problem is that everyone is trying to be an investor, but be an investor while becoming a trader. So that's the problem, because everyone thinks that they can be smart enough to play the yen strength, and when the yen strength dries out, they can go in and buy the stock again. So that, I don't know how successful that strategy will be. But at these levels, obviously, there's a lot of value in the stock, because I think one factor also which led to weakness in some auto stocks on Friday was SIAM forecasts on auto sale growth, which by themselves are I can't just believe what they are saying. They are saying two-wheelers will grow just 3%. Every company individually you speak to, they say 10 to 15% growth. So I don't know where that SIM figures are coming from. So I think Maruti is well positioned to gain from all the pay commission benefits, raw material prices are stable, and then interest rates also coming down. So I wouldn't be negative on Maruti at these price levels. I think the stock will do reasonably well.
Mm-hmm. Sandeep, would you relook at telecom at all? Bharti is now buying Aircell's waves. They just may now be able to compete with a little bit of a stronger hand with Reliance Jio.
I think strategically, whatever Bharti has been doing over the last 6 to 9 months is execution of a very brilliant strategy, I would say. That exiting some of the African assets or trying to exit and exiting slowly, which are drag on them, using that cash to actually buy a spectrum from people who are desperate to exit, they can't do anything. And I think the last two spectrum buys are pretty good. I would say that Bharti is much better positioned today than it was 6 months back. The price doesn't reflect those strategic actions. And from here on, I believe Bharti should actually do very well and be a clear outperformer. And whatever Jio concerns might be, Bharti is also well positioned. So I would say that a 20-25% return from these levels over the next 1 year shouldn't be impossible.
Let me get another opinion on Bharti from Mayuresh. Mayuresh, Sandeep feels that Maruti can give a 20 to 25% return in next 12 months. Can I challenge his argument by just saying that Bharti has diluted the balance sheet a lot and the return ratios will not be all that favorable? The data growth which we've been talking about clearly is evident, but the voice business is contracting.
So again, Nikunj, I think you need to understand a few pointers related to Bharti. I think if you look at the voice traffic, the voice traffic is increasing, but the voice ARPMs are relatively flat, or they are coming down. Even for this quarter, the voice ARPMs largely expected to be around the 33.5 paise per minute. If you look at the data side of revenue for Bharti, the data volumes again have been increasing quite significantly, and the buyouts that they've done with Aircell recently, with Videocon a few weeks back, yes, I think that does show up its usability in terms of offering bandwidth in the 4G space, and clearly challenges Reliance Jio. But again, I think the data realizations are going down quarter after quarter. Secondly, I think even if you look at the Indian EBITDA margins, clearly I think they are stabilizing or they're showing a downward trend as well. The African business with the kind of debt they've got in the books, and clearly I think they're working on a deleveraging strategy there. Yet I think the margins there are going to be a little bit constrained, close to the 20% kind of a mark even in Q4. So I think the kind of CapEx and the kind of network expenses that Bharati and generally the telecom operators need to do and have been doing are going to take a toll on their return ratios. So from a medium-term perspective, yes, I think the return ratios do get hampered. You're still going to see stickiness happening in both voice ARPMs, in data revenues going down, in ARPUs probably consolidating or relatively I think coming down on a more quarter-on-quarter basis. But clearly from a long-term perspective, all these things might work out positively in favor of Bharti Airtel. But will the stock perform from a medium-term perspective? My own take is that with cash flows not improving immediately, the market's cognizant of this fact. Yet, I think the return ratios are going to take a hit with the kind of spectrum payouts they are doing. And even the 700 megahertz payouts are going to be a very interesting prospect to watch out for. Because with the kind of base prices that they probably kept, if Bharati probably bids for this one, it's going to increase their debt in a significant way as well.
Okay, let's brace ourselves then for the pre-open rates this morning, and let's just revisit what the Asian picture is looking like, because Asian markets are getting fairly slippery at this juncture. It's largely a sea of red all across, barring China, which was holding out the last time we checked. But let's just recap the Asian screen for you. Hong Kong has seen a bit of a rebound. It's holding up by about 0.5%. Nikkei continues to languish by about 200 odd points, and China would just come up for you on your screens as well, because that was holding up, and that continues to put on some more weight. It's a good 2% bump up that you're seeing for Shanghai this morning. Kospi too has rebounded from its earlier lows. Is there any rebound then on the Singapore Nifty, or that continues to languish, because that was indicating just a mildly soft start? That's the SGX Nifty in trade for you, currently just about flattish in trade. Some stocks which are going to be in focus, and we definitely will look out for what Bharti is going to do, considering they've bought aircells waves in about 8 circles. So strike slightly a stronger hand now to compete with Reliance Jio. Look out for that stock, and of course that's the first pre-open rate for you. The Nifty starts off absolutely flat, pretty much how we shut shop, still clinging on to that support level of 75.50 right now in trade. Let's see, early days yet, but let's see how the rest of the trade actually pans out and where we finally settle at for the pre-open rates. But a flat start, much unexpected lines, there's no surprise there. Sun Pharma is a stock that I definitely want to look out for, considering they've said that the FDA has now approved its drug for ocular pain. So Sun Pharma starts off smoothly, 1.6% higher. JSPL, which has won a court case over an iron ore mine, so look out for that. And M&M, which is eyeing growth in its tractor segment on good monsoon forecast, and post the SIAM data, look out for how the auto basket actually pans out. These are a couple of stocks which are in focus. But also check in on what the currency is looking like, considering the currency markets were shut in Friday's session, and they're opening after a long gap as well. The rupee starts off stable at 66.45 as we speak. Cement, that's the other one which I want to definitely check in on. India Cements being one such strong case in point. Besides cement, you also had names like a Just Dial, Page Industries and Jindal Steel, which shot up very, very smartly in trade. But early days yet, those rates don't seem to have kick-started. In the meantime, let's bring on board Darshan and highlight the 3 stocks that the dealing rooms are chatting about this Monday. Darshan?
Good morning, Ayesha. Havells, for one, is something that, it's pretty much unanimous today. If you're looking at it, stock trading very close to its lifetime high. Technically looks extremely strong FNO action, high open interest build-up. So over the past few days, we've seen that there is a lot of accumulation that is happening, and it's set to move much higher. So Havells is the first counter that is being watched about. Dr. Lal's Path Lab is also something that is watched about. Citi today has come out with an initiating note, and a target price is almost 17% higher than the current market price. So, it's one of the first, foreign brokerages that have initiated, and definitely there will be a little bit of institutional interest on Dr. Lal's Path Lab, which will move. And definitely one counter that will move is Rupa. They've had an agreement to sell products of FC UK in India. We've always seen that, some of the companies that have a foreign partnership, at least, especially in the Innovare segment, they tend to move up. So on this news, this counter will be very active in today's trade.
Which we rarely talked about, has gone and forged a global partnership with one of the behemoths. Surely, in terms of opinion, lot will change. And when opinion changes, the P multiple, they often tend to expand. So Rupa may see more than earning expansion, a P expansion for sure. 20% up on Friday. In the pre-open session, it is up 20%. That just tells you that how association with a good global brand can really change the perception trajectory. And perception clearly has changed for Kotak Mahindra Bank as well. Avant CLSA now seems to be bullish, and they are really making a very tall claim for Kotak Mahindra Bank.
Yes, they are. And Nikunj, more so post the integration of ING Vesya Bank after 1 year. So basically, CLSA has initiated coverage with an outperform. They're placing a target of 770 on the stock, and they believe that all the integration costs have already been absorbed, and now Kotak can seek to reap benefits of the ING merger. They believe that the branch share having double geographical footprint is very strong, and they see a 32% CASA deposit CAGR. They believe that the CASA ratio can be hiked by about 40%, and that will support 25% loan growth. Even the fees will expand strongly, and they expect the ROA to expand by about 40 basis points to 1.6%, which will drive the ROE expansion by 15%. CLSA also projects very strong CAGR, which will drive the 23% growth over FY 17 to 18. And they believe that the reported growth could be above 40% on account of the low base. Moreover, there's very mild exposure to some of the risky sectors like infrastructure, metals, etc. And that could support the good loans as well as sustain credit costs. Some key risks, they see weaker scale-up of the deposit franchise, disappointing cost-saving efficiencies, and if the RBI directs Kotak to merge the group's NBFCs with the bank, that could potentially impact the ROAs as well as its growth. But for now, CLSA is very optimistic on Kotak.
Right, Avan, thanks a lot for that. And I want to go to my fundamental experts to get a view on Kotak Mahindra Bank. Now, you can't deny the value of the franchise, but investing is also about buying a good business at a great price. And Mayuresh, at 5 times book, we've argued in the past that Kotak Mahindra Bank exactly is not cheap. But those who made a case that Kotak Mahindra Bank is not cheap, I guess they've really been on the wrong side of the trade for the last couple of years.
Oh yes, and the bank has performed both in terms of how their advances growth has been, how the asset quality has panned out, and extremely strong metrics that a bank would require. So even in tough macroeconomic conditions, the bank did grow decently well, both in terms of their credit growth doing exceedingly well. And again, I think the merger with ING, I think it's taking a little bit of a time, which is creating some amount of skepticism as far as the bank is concerned. The integration, the ramp up, the scalability is something ideally that a lot of analysts would probably like to see and witness. And yes, I think the kind of book quality that ING probably has in terms of exposure at this point of time does create some amount of jitters when it comes to the consolidated earnings for Kotak Bank. However, in my opinion, I think it's a very qualitative franchise. If investors are holding on to Kotak Bank at lower levels, they should continue doing so.
Sandeep, great bank, and it has done well in last 5 years because the retail asset was growing. The challenge for Kotak is that they don't have a strong liability franchise, and we've been making a case that now it's time to revisit wholesale banks, simply because if the economy comes back, wholesale banks will do much better, bad loans will become good loans, and the price to book will really expand. That may not be the case for Kotak Mahindra Bank.
I think that won't be the case for Kotak, but it will be the case for HDFC. So since we are discussing Kotak only, because you see, Uday Kotak has been very wary of the economy, economic growth. He's been talking about a global crisis and that. So they have compressed their balance sheet growth. So if they are negative about the economy and they are compressing their balance sheet growth, then it's unlikely that Kotak will outperform, at least for the next 1 year. I think unless, so I am actually positive on the economy, and HDFC Bank seems to be positive on the economy the way they are expanding their balance sheet. So I think it's better to look at HDFC Bank, IndusInd Bank rather than Kotak Bank among similar banks with similar kind of high quality asset book and growth prospects.
Besides banks, the one sector, Sandeep, that rebounded last week was pharmaceuticals. Now, agree, they've been just so beaten down. But would you say that this is just a technical bounce which is taking place, or do you think people are genuinely buying because the stocks had corrected so much?
So I think it is both, I would say. One is a technical bounce which will happen when the stocks fall so much. Secondly, there is a huge set of investors in the market who still believe that the economy is going nowhere, the markets are going nowhere, and they would rather buy so-called defensive stocks on every fall. So I think that's always the case when an outperforming sector of the past first falls. You tend to buy that only, and you don't realize that the other sectors might be better to buy. And I think that phenomena is playing out in pharma. But this investment, I don't think is likely to yield market-beating returns.
CK, what about interesting pharmaceutical stocks that one can look at buying at the current levels?
Well, I think you'll have to cast your net a little wider unless you happen to be a longer term investor and then want to remain in the big names. The big names are all taking a bit of a drubbing, right? And now the interesting thing is that US FDA approvals are seeing nowhere the kind of impact that US FDA, let's say, critical observations are having. So there is this huge risk that any kind of critical any kind of critical observation is leading to tanking of stocks. So I think people are just a little bit moving away. So you'll have to pick and choose in the mid-cap space where the ownership is not so large, particularly institutional ownership. So I think there are, this will be very story-based. I don't have ready names to give you right now, but this is the approach that I would take, that today the biggest problem for most of the pharma stock has been or is the large institutional ownership and the kind of nervousness that they exhibit as soon as some sort of love letter comes from the FDA. I think that is bedeviling it, and I would leave these large cap stocks alone for a moment unless they fall into deep value areas, which is of course something which might happen over a period of time, not immediately. So I would prospect in the mid cap, small cap space, pick up some quality names of where some stories are developing. Like I said, I don't have any ready names to give you right now.
I guess currently for pharmaceutical, the technical and the fundamental side, they're on the same side of the trade, and that's on the downside. And typically when that happens, buyers will not make a comeback. And also the other problem for pharma is that problems are only getting multiplied and there is no resolution inside. So whichever company has come under the US on the, has the US FDA problem, there has been no resolution. So for Wockhardt, they are still struggling and waiting for that US FDA approval, even though they've taken all the necessary remedial measures. That's the story for Sun Pharma. I think that's the story for Ipca. And now non-US FDA clients are also blowing the whistle. We heard that on Ipca, where a Swiss buyer has said that we will not like to buy API from Ipca till the time US FDA problems are not getting resolved. So problems are multiplying, solution is not in sight, earnings are unlikely to pick up, valuations were rich, and institutional investors are throwing these stocks as if there is no tomorrow. But you don't have to cast your net big when it comes to the entire consumer durable space, because hardly any listed stocks are there, and one such listed stock is Blue Star. Mayuresh, what's the rationale behind liking Blue Star?
Now again, Nikunj, if you look at the underpenetration that the AC market is in India, there is huge scope in terms of expansion out there here in terms of market size as well as volumes. Secondly, if you look at the unitary cooling solution, which is the room AC, it has been increasing its market share, and again the management expects the market share to inch upwards over the next few quarters. Third, in terms of input costs, we probably expect input costs to remain benign, which means that the margin expansion can be quite evident. And fourth, I think both in terms of top line and margin expansion, I think that growth can very well be evident in the quarters to come. I think this quarter is going to be one of the strongest quarters, and the next for Blue Star, looking at how the summer season is panning out, the kind of new models that it's probably getting into the market at this point of time. And again, I think the cash infusion from Blue Star Infotech will help its balance sheet expansion. So I think we remain extremely optimistic on air conditioning manufacturers, Blue Star being one of our top picks.
Okay, good chatting with you, Mayuresh. Thanks much for taking the time out and speaking with us today. That's the view then coming in from Mayuresh Joshi from Angel. But Sandeep, how can we not talk about cement as a pack? What a phenomenal move, but does it seem like this is just the start of a